Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to talk about one of the biggest investing mistakes I've made in recent years. I call this investing mistake selling the stock too early instead of holding it for the long term. I'm going to give you 3 examples in this video. I will explain the investing lessons I've learned from them. I sold several outstanding companies too early out of fear instead of holding them for the long term. If I hadn't made these investment mistakes, my portfolio gains would have been much higher by now. The first investment mistake was selling Nvidia too early for quick profits. The second biggest mistake was selling Meta shares out of fear that it would drop further. And the third biggest mistake was selling Nflx out of fear instead of holding it for the long term. Hopefully, after you watch this video, you will learn from my past investment mistakes so that you won't repeat them in the future. If you like this video, make sure to hit the like button, subscribe and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Each video usually takes me more than 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before showing you my past investing mistakes, let me show you this investing strategy I've been following over the past several years. This long-term investing strategy has been working out very well for me, even after I made many investing mistakes before. To grow your stock portfolio substantially over time to well over $1 million, you just need to follow these steps. First, you have to find the best companies that are most competitive in their industries. The best companies are the most profitable, have the largest economic moats, have great products and services, and have great long-term growth prospects. Second, you have to buy their shares only when they dip below their intrinsic values, so that the downside risk is much lower, while the upside potential is much higher. In other words, only buy the best stocks when they're undervalued. Third, you have to hold the best stocks for the long term, regardless of the market noise. Fourth, you should keep adding more money to your portfolio every month so that your portfolio can grow much faster over time. Fifth, you have to ignore all the market noise and focus on business fundamentals instead. Also, you should rarely sell stocks. Only sell the stock if it's no longer an outstanding business. I'm going to focus on this step in this video and talk about the biggest investment mistakes I've made over the past several years. And sixth, repeat the whole process to grow your portfolio much more over time. If you follow these steps, you'll be able to grow your portfolio much more over time and even beat the S&P 500 by a large margin over the long term. Let me show you one of my stock portfolios. It's separated into 3 different accounts. This is to show you my current investing strategies. This is the first account. This account has been performing very well. It has also been beating the S&P 500 by a very large margin because I've been investing in and holding the best companies instead of selling and trading them. For example, I've invested in MasterCard, Microsoft, Visa, TSMC, Amazon, Google, Meta, and SML. They are the best and most competitive companies in their industries. They all have huge economic moats. They are all very profitable and generate a lot of free cash flow. They are all near monopolies. This is the second account. It's the same story as the first account. I've invested in Apple for many years. In addition, I've invested in Google, TSMC, Visa, Microsoft, Nvidia, Amazon, and Nasdaq 100 QQQ ETF. I realized that the best strategy is to buy and hold the best companies long term and not sell them for quick profits. This is the third account. This account is much newer than the 2 other accounts, so it will take longer for these outstanding companies to become multi-bagger stocks. You can see I've invested in TSMC, Nvidia, Meta, Microsoft, ServiceNow, Amazon, Google, AMD, Visa, Broadcom, Synopsys, Intuit Inc., Adobe, ASML, and Lam Research. I think this account is too diversified now, so I will likely make this account more concentrated like the 2 other accounts later on once these stocks grow much more and become multi-bagger stocks. Based on my experience investing for many years, I realized that a concentrated portfolio with the best stocks always outperforms an over-diversified portfolio with many stocks in the long run. Let's talk about some of my past investing mistakes so that you can learn from them, and hopefully you won't repeat my mistakes. All these investing mistakes are related. I mentioned this many times in my previous videos. I made a huge mistake selling my Nvidia shares too early for quick profits before. I sold Nvidia several times before ChatGPT came out. I didn't realize how big Nvidia's data center business would become once AI became one of the biggest industrial revolutions. Just to give you more context, during the large market correction in 2022, almost all the stocks, especially tech stocks, were oversold. The market was extremely fearful because inflation was too high and the Fed was raising rates aggressively to fight inflation. During the large correction in 2022, I was very concerned that Nvidia would drop more because Nvidia had too much GPU inventory. Consumers bought too many GPUs during the pandemic. After the peak of the pandemic, the demand for Nvidia's consumer GPUs had dropped a lot, so Nvidia had to write off a lot of GPU inventory. In hindsight, that was only a short-term headwind that impacted Nvidia's earnings for several quarters. I sold Nvidia too early because I thought it was overvalued compared to other stocks such as Google, AMD, and TSMC. I sold all my Nvidia shares, took the profits, and reinvested the gains in other stocks such as Google, TSMC, and AMD. In hindsight, that was a huge mistake, even though I had made good gains from Google, TSMC, and AMD. But if I had kept my Nvidia shares, I would have made at least $200,000 more by now, especially after Nvidia's 10-for-1 stock split. So this was a huge investing lesson for me. To correct my mistake, I bought back many Nvidia shares earlier this year because I knew that Nvidia was still undervalued. More importantly, we're still at the beginning of the current AI revolution, which I believe will last for many years. Of course, I had to buy back Nvidia shares at much higher prices than before. Here is an important investing lesson. If you know that it's a great company that has excellent long-term growth prospects, it doesn't make sense to sell it for a quick profit or sell it because of short-term headwinds. As long as the company has strong fundamentals and great long-term prospects, it will eventually recover and perform very well over the long term, despite the short-term headwinds, because of increasing earnings and increasing free cash flows over time. This is my second biggest investment mistake. I made a huge mistake selling Meta out of fear during the large market correction in 2022. Initially, I thought Meta was becoming a wild trap in 2022 because Meta's advertising business revenue growth had slowed down a lot. I thought Meta's advertising business would be greatly impacted by Apple's new app tracking options. Under Apple's app tracking transparency framework, iOS apps must ask users for permission to track their activity across other companies' apps and websites. Of course, most users will opt out of this app tracking option. This means Meta will have much less user data to show more relevant ads to users. Initially, this app tracking option impacted Meta's advertising business a lot. However, to my surprise, Mark Zuckerberg was able to turn Meta's advertising business around by spending billions of dollars on AI infrastructures, algorithms, and advertising tools that will allow Meta to target ads effectively without using too much third-party user data. In hindsight, I was wrong about Meta's advertising business. I didn't expect Mark Zuckerberg to be able to turn Meta's advertising business around this quickly. I sold some Meta shares and made some gains before. However, I panicked during the large market correction in 2022. I sold my remaining Meta shares and had a large loss because I thought Meta would drop further. Looking back, I realized that I was too focused on Meta's short-term headwinds. If I ignore all the market noise and focus on Meta's long-term fundamentals and long-term prospects instead, I would have held my Meta shares instead of selling Meta out of fear. Of course, as you may already know, Meta has recovered a lot since the large correction in 2022. To correct my investing mistake, I bought back some Meta shares earlier this year when Meta dipped, but I had to buy back Meta at much higher prices than before. Here is an important investing lesson. Whenever there's a large market sell-off, always focus on the business fundamentals and ignore all the market noise. As long as the company still has strong fundamentals, great long-term prospects, increasing earnings, and increasing free cash flows over time, it will recover and perform very well over the long term, despite all the short-term headwinds. This is my third biggest investment mistake. Similar to the previous two mistakes, I sold Nflx too early during the large market sell-off in 2022. As you may remember, Netflix stock plunged a lot in 2022 because Netflix growth dropped substantially during that time. Netflix had very high growth rates during the peak of the pandemic. However, Netflix was starting to face a lot of competition from other streaming services, including Disney+, Hulu, Apple TV+, Amazon Prime Video, and HBO Max. At that time, I thought Netflix was becoming a value trap because Netflix revenue growth and EPS growth had decreased significantly in 2022. Similar to Meta, I was too short-term focused. I was too focused on Netflix short-term headwinds. I decided to take the loss because I thought Netflix might drop further. In hindsight, I should have bought more Netflix shares when it had a huge correction in 2002. Netflix was substantially undervalued when I sold it. Now, Netflix business has recovered a lot and it has become more profitable than before. Netflix is the only streaming service that's been growing consistently and earning very consistent profits. Netflix is much more profitable and has much higher margins than Disney+, Apple TV+, Amazon Prime, HBO Max, and other competing streaming services. Here is an important investing lesson. The market often overreacts to any negative short-term headwinds. It's very important to ignore all the market noise and focus on the company's long-term fundamentals instead. As long as the company still has strong fundamentals and great long-term prospects, it makes more sense to buy the dip whenever it's undervalued, instead of selling it out of fear. Eventually, the business will recover and earn much higher revenues and profits over time. Let me summarize the important investing lessons here so you can learn from them and not repeat my past investment mistakes. First, I believe it's very important to never sell great companies, regardless of any short-term headwinds. Second, the market is not always rational. There's always a lot of noise in the market. The market always overreacts to any short-term headwinds. It's very important to ignore all the market noise and focus on the company's long-term fundamentals instead. Third, as long as it's still a great company that has strong fundamentals and great long-term prospects, the stock will eventually recover and perform very well over the long run because of increasing earnings and increasing free cash flows over time. Fourth, instead of selling the stock out of fear, it makes more sense to buy the dip whenever the stock is likely undervalued below its intrinsic value. Buying the dip works very well as long as the stock is a great company that has strong fundamentals and great long-term prospects. Buying the dip does not work for value trap stocks. And fifth, once you have invested in the best companies, it's much better to hold them for the long term instead of selling them for a quick profit. The best companies always perform much better and grow much more over time, despite all the short-term headwinds. Now, all these are only my opinions and my analysis that's based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.